In the live stream this morning, one of the members came up with a little company I'd never heard of, D-Local. DLO is the symbol. And I took a look at it and it looked fairly interesting. I wanted to make a video and share more about this little company. They've been growing really fast, but more recently, they kind of hit a wall and stopped growing as fast as they were growing before. But if they can reestablish their growth, this stock can triple in value over the next couple of years. And that is exciting to me. So I wanted to analyze the company, share with you what I'm seeing and what I plan to do with this little stock. First, let me tell you about the company. So DLocal is a payment systems company. They're listed as a software company. And I would agree with that, but I would say they're more like a PayPal. They're more like a transaction processing company as opposed to a pure play software company. Now, they're partnered with a lot of well known companies like Dropbox, Nike, Booking.com, and so forth. And they are located in countries, for example, in South America. They're in a number of countries. They're in Mexico. They're also in a couple countries in Africa. They even have gone to Asia. So they're in a number of countries. So I like that they're in South America. I think it's an area of growth. So that's interesting to me. I am a little concerned that they're kind of spreading themselves a little too thin, going as far as Africa. But I'll hold that just as a yellow flag, not necessarily a really bad thing so far. The company does make sense to me. I've been an investor in companies like this for some time. I made good money on StoneCo. I sold StoneCo earlier in 2024 and thought it was a good investment. Let's take a look at DLocal and see, is this a good investment at this time? Another thing that is interesting about this company is they are tethered to new economy industries like online retail, shared economy marketplaces, digital media, SaaS. These are all like new industries. Very good because these are growing industries, organically getting bigger. They're going to need a payment system that is going to grow with them. So I'm glad they're in companies that are going to shape the future as opposed to being in industries that are collapsing, contracting. We've got a great community of investors coming together, and you can be a part of it. You can be a paid member and be invited to calls that the community has and really share in the resources that I've created, like tools like the analysis tool that you see me use. You can consider being a sponsor either at $10, $25, or even $100 if you want the most perks. I'd really appreciate you looking at the details in the video description and considering being a paid member of the channel. I'd really appreciate that. Let me take a look at the fundamentals of DLocal. The company is a small cap company at $2.5 billion in US dollar market cap. Their revenue is 707 million. So that's a pretty good ratio of sales to market cap. They are profitable. They've been consistently profitable. That is really good. PE is at 20 for the current year, at 18.8 for 2025. That looks good. Analysts like the company. They say it's a hold, but it's discounted by 50%. Holy smokes. That is a nice discount. And the reason for it is the stock has really sold off in the past year. Investors are concerned. Why are they scared? The company has been growing year after year at a really high rate. Super impressive to see them grow at these high rates. But I think the reason why investors are a little concerned is the company's hit a wall, a growth wall. The last quarter, if you compare the Q2 2024 quarter to the same quarter in the previous year, they only grew at 6.29%. More concerning is if you look at the sequential growth, meaning Q1 to Q2, revenue actually went down. And sequential growth is telling you what's going to happen in the future. So DLocal has plateaued their revenue, and that's what I believe investors are really concerned. They are wanting to buy into a growth company. If they stop growing, I think the stock price is going to be valued differently. One thing to really consider. Now, the next question that pops into my head is, well, what is the company guiding? Are they guiding to grow or to stay about the same? To determine their guidance, I went to their last quarter earnings, and they did do a nice job of communicating their guidance. And their guidance basically was toned down. They brought it down, and it's going to have them basically be flat. So the flat revenue growth is now going to be 2 quarters. Again, I think that's why the stock is selling off. In order for this stock to really take off and double in value, triple in value over the next couple of years, they have to start growing. Now, the company is communicating that they have some ramp up going on with some of their products and markets. So if in a quarter they start to grow, I think the stock's going to rally. If they go through another quarter of revenue being flat or even worse, going down, I think the stock's going to stay near its current price or even go down further. The balance sheet for DLocal is excellent. they have a lot of cash, 652 million, and they just have a couple million of debt. So they could pay their debt off, geez, with a check out of their checking account and be done with debt. So they have less than $4 million of debt. So balance sheet's really strong for the company. Although D Local's a young company, they've been producing free cash flows, and I really like that. When young companies just start creating free cash flow, it's a sign that it's a valuable business. So in this case here, they've had positive free cash flows for 5 years. In the trailing 12 months, and every quarter in the last 4 quarters has been in the positive. I'm going to use the trailing 12 months of free cash flow as a starting point in my valuation, and I think it's a good conservative number at 136. As this company continues to mature, their cash flow is going to increase because they get better. They buy certain things they basically they use for years that they don't have to buy again. So really their scale begins to produce more free cash flow, which is a positive thing for a company like this. 11 analysts cover the company. That's a good number of analysts on a small company. And the worst projection is that the stock will drop to $8, which is a pretty good haircut on the stock. But somebody's really optimistic and believes that it's going to about triple in value. Holy smokes. If that happens, this is a really good stock. In general or on average, it's expected that they are discounted by a fair amount. These analysts believe that it's worth more. They're basing their analysis primarily on earnings per share. And when we look at earnings per share, the very positive news is that they are profitable. Again, free cash flow producing and profitable. Those are really good signs that the company is valuable. I'm going to use 2025's numbers, and I'm going to use a reasonable PE. In my valuation, the growth also looks really good in 25 and 26. So really good profitability growth. I'll use that 58 cents a share in my valuation. So I valued D Local by discounting their free cash flows and looking at their earnings per share and valuing the company with the earnings per share as well. The free cash flows are positive, and I have a forecast that starts with $148 million, which is basically their trailing 12 months, but then I add 8% of growth, and then I grow the first 4 years by 8% per year. I'm going to have the terminal value growing by 8% because they're in countries that have a high growth GDP for those countries, and they're a small company. They have a lot of room to grow. So that's a reasonable growth rate at 5%. Since it's a smaller company outside my home country, I'm going to go with a higher discount rate, which will be 10%, to discount all those free cash flows and get me an intrinsic value on the cash flows, $2.9 billion of value. As mentioned, they have a great balance sheet with $652 million of cash on the balance sheet, but only $4 million of debt. So it actually bumps up the valuation up to $3.6 billion in equity value. The market cap for the company is 2.5, so it leaves a nice discount of 42%. 42% discount, and I'm driving a 10% return on the net present value of those cash flows. Looking at earnings per share, starting with the 58 cents, I'm going to use a PE of 18 and a growth rate of 20%, which is lower than what analysts were really projecting. I want to be conservative, and I get a discount of 41%. So on average, it's about a 42% discount on D Local. Now that's a pretty good discount, and I might want to throw a few dollars at it just because I like the regional exposure. For some reason, it's been hard for me to find companies in Latin America, and this is an opportunity to buy into a company that's in an industry that I like. I did own Stoneco. That was a good investment. I got in, I got out. It might be a good opportunity, if anything, just to watch this company and at some point begin to invest. So I like D Local's regional exposure. I think it's great that they're in Latin America. That's one of the positives. I also like that they're coupled to new generation companies that are in industries that are expanding. So I'm putting them partially in the green, but most of the business has plenty of competition. So most of the business I put in the gray, where they don't have clear competitive barriers. Maybe one of the reasons they're not growing is that competition. So it's an interesting company that I want to watch. Now, if this sell-off we're in continues and this stock goes down and maybe my discount is more in the 60% range, I'll probably throw a couple $1,000s into D Local and be an investor. At worst, I'll watch the stock, wait for the next earnings, and see what they have to report. Hopefully they show that they're beginning to grow. If they're beginning to grow, I am buying the stock and going to put it in my portfolio. So that's my review of D Local. I hope you found it interesting. Keep in mind, it's just my opinion. It's for educational and entertainment purposes. I'm not recommending you buy, hold, or sell D Local. Make your investing decisions very, very carefully. Thanks for watching. Good luck investing.